Hope you're all having a great weekend, ledges. Today I want to present to you some statistics. I have a huge number of statistics across the markets that I trade regarding all kinds of different observations I've made over the years that I keep track of. What I wanted to do is to present you with a statistic based on something that I have shown you during the week, which will add some further colour to it. And one of the things I spoke about in the week was inside week failure. In actual fact, I spoke about inside week failure twice last week, and the first time I spoke about it, it was in the US dollar versus the Japanese yen, which I'm going to bring on the screen and show you here. So just to recap, we had an inside week here. An inside week is any week where the high to low of the week are within the previous week's high to low. It's nothing to do with the bodies, it's the extremes. And the inside week failure occurs when we break one side of the range and close back within it. So you can see here we break the low of the range and close back within the range. Note that the low of the inside week is also off this massive level, which makes it even more compelling. When this happens, I am looking for the market to try and gravitate back towards the other side of the range. The thinking behind this trade is that market participants get trapped taking a go with approach on inside week breaks. So we get an inside week, they come in and sell beneath the inside week low, the market moves back within the range, they're trapped and forced to puke as the market breaks the other side of the range. Now, the second time that I spoke about this was in the New Zealand dollar. And in the New Zealand dollar, I was talking about preempting inside week failure. So you remember I was saying it was one of my favorite setups to see price break support, form an inside week, and then try and sell beyond the inside week highs. So I look for a level beyond those inside week highs and try and come in and short. And the level that I had picked was this series of lows here. Now you'll remember I didn't end up selling it because I thought that the FTA, first trouble area, was too close to market, being this high at the time. But nonetheless, I'd spoken about that trade earlier in the week, and although I did cancel it, it did end up actually having worked, although it was a very, very close call. But I wanted to talk to you a little bit about the stats behind inside week failure and focused on the New Zealand dollar. So what I'm going to do is I'm going to pull on this data and let me explain what you're looking at. What I've done is I've gone back and I have sourced the data for the New Zealand dollar, and I've looked at the amount of time that the market has broken either the high or low of an inside week and noted down the date of it. In actual fact, I've been compiling this data as far back as the beginning of 2007, so we have a decade of data, but there is only 53 occurrences in total. Now, someone asked me the other day, how many occurrences of a pattern should you have in your sample size to get faith in it? And there isn't a hard and fast rule as far as I'm concerned. The more the better, of course. I know some people that will be happy with 50 examples. I know others that will want as many as 500. For me, I do agree that the more the better, but I also think it's important that you have the data collected over time, because you want to make sure that the pattern occurrences that you're collecting are not all linked by the same type of market cycle. So you want to know that the pattern holds true over different types of cycles, like high volatility environments, low volatility environments, trending environments, trendless environments, and the more time you collect that over, the better. So 53 is not a huge sample size, but it is the number of occurrences that we've had over a decade, so it is what we're working with. Now, the interesting thing is you'll see that of these 53 inside week breaks, the probability of a close beyond the extreme of the inside week is only 37.73%. So the probability of us breaking an inside week high or low and failing to follow through and closing back within the range is 62.26%. Now you will see why I'm looking for a short when the market breaks the high of the inside week, because the probability is that what you see occur here is in actual fact what is going to occur. We're going to break the range highs but close back within it. Now it's quite important to note here that although that's a fairly decent probability, that only really gives us a target of where the market's going to close out the week. So it's not enough to just say, we're breaking an inside week high, let's get short. Ideally, what I'm looking for is a very, very good area to trade at, and hence the fact that I spoke of an area of prior lows at the 38% fib, and crucially, it was past ATR as well, so it's likely to get mean reversion from that perspective. And that means that I've got a high likelihood that the market's going to turn due to those factors, and it's going to get me enough on side that then if the inside week probability doesn't play out, I've got a buffer. Also note that when I spoke about this level as early as Monday, that's very, very early in the week to get involved in the trade. It's very difficult for us to come in and hit it on Monday when the idea behind the trade is based on the fact that we're going to close down through the inside week high by close of business on Friday. So that's why when I initially spoke about the level, I was just talking about playing it from one level to the next, which is shorting at the level I spoke of, 70.15, and playing it actually back to the inside week high because of the fact it was early in the week. Now, we could take that a little bit further and say, what's the probability of breaking both sides of the inside week in the same week? So when we broke this high in the New Zealand dollar here, what was the probability that we were going to come down and we were going to break this low? And the probability of that occurring is actually only 22.64% of the time. Now, I know that some of you were actually holding for that. You got short at the area that I spoke of and you were holding for it to go right through and break the inside week lows. But again, this is why it's useful to know what the probability is of that occurring in the same week, and you can see it's pretty low. So you may now be thinking, well, okay, it didn't do it on the same week, but it has broken it, it has closed back within the range. What is the probability of it now coming down and breaking this low here before it trades up and breaks the high of the inside week? And the probability of that occurring is 45%. So it's less than even odds that it's actually going to do that on a weekly time frame. Now, when I was compiling these statistics, it got me thinking, you can't just take the probability in and of itself of a pattern occurring, because it may be the case that 45% of the time it will go to break this low before it breaks this high, but it may be that the risk reward is so good on that trade that you come out ahead anyway, even on a strike rate of less than even odds. So what I did is I went back and I looked at all the individual inside week failures, and I looked at if you'd got in on the close of the inside week failure and put your stop beyond the extreme and your target on the other side of the inside week, what the result would have been. So here you can see, for example, on the 26th of August 2007, and I'm going to take you right the way back there, and it's this example here, that we get inside week failure, and if you come in on the close and you put your target a pip below this low, the result is 190 pip winner. You can see that it moves straight down in the following week, and it does eventually tag this area before taking the stop which you would have beyond the high, which would have been a 258 pip stop, and you can see the resulting R is 0.74. However, there is, over the data that I've collected, and it's not much because there's only 20 occurrences, not an edge in doing that. Here is the resulting equity curve over that decade of data if you traded it mechanically like that. That's the return in pips, and that is the return in R. So basically it's down 3.38 R and a total of 400 pips. Now the reason for that is fairly straightforward. There is not only less than even odds probability of the inside week failure working, but if you have a look at the resulting R column, you can see that many of the winners that you get are below 1R, whereas all the losers are 1R. And this is what happens with many strategies, of course. So you can see that there's just not a positive expectancy in that. One thing to understand is that often patterns like this are similar across all currency pairs, but not identical. There are some currency pairs out there where the same pattern has a markedly different result. So I don't want you to go out there and think, right, well, this is what it is for New Zealand dollar, so it's probably going to be the same for all pairs. It's not, and you just have to bear that in mind. But how do I use this in my approach to New Zealand dollar? Well, first off, I'm well aware that taking a go with approach on an inside week is not a high probability play, and the later through the inside week it's particularly not a high probability play because the odds suggest that we'll close back within the range. So if it's early in the week and I'm just doing one level to the next and I'm looking to perhaps be out of the trade the same day, then I won't mind trading the same way as an inside week break. But if it's mid to late in the week and I'm looking for quite a decent target, then I'm probably not going to take that trade. The other thing to bear in mind is that if we have inside week failure, the odds are slightly less than even that it's actually going to work. So you have to make sure that your payoff on any trade that you're taking, where you're using this bias, is very good. And I do trade this inside week failure as a pattern, but the way that I will usually come in and trade it is I will trade it on the 60-minute time frame. So for example, we'll get an inside week failure, I'll look for a retracement of the inside week failure and then look for it to make a run on the stops. And that way we get a decent risk to reward ratio. So that's the statistic of the week, and I will see you all again next week. Have a great weekend, ledges.